It's kind of hard to look at crypto these days, you know? Like everywhere you look, it's red.
Yeah.
Bitcoin down around 84,000.
Right.
That's quite a drop from where it was at its peak in January.
Yeah.
And it's not just Bitcoin, right? Ethereum.
Uh-huh.
Even those meme.
Right.
So what's going on? I mean, after all that bullish talk.
Yeah, it's been quite a shift, hasn't it?
Yeah.
It really has.
Yeah.
A lot of optimism turning into a lot of caution
Yeah.
from investors, and that's what we're going to look at today.
Yeah.
You've got some really interesting sources here.
Yeah.
From, global events,
Yeah.
regulatory changes,
Right.
to even come away with a much clearer view
Right.
of what's really going on
Yeah.
in digital assets.
Yeah, we're looking under the hood at everything, right? From global trade tensions and how those could impact crypto to the, always changing regulatory Bitcoin halving. Okay, let's jump into it.
Yeah.
And I think we have to start with something that I think is casting a pretty big shadow on a lot of different markets.
Sure.
These renewed geopolitical tensions, specifically these U.S. tariffs that we've seen reintroduced.
Right. And what's so fascinating here is how direct, when tariffs come back
Yeah.
on major partners
Yeah.
like China, Canada, Mexico,
Yeah.
it creates uncertainty, right?
Yeah.
It just makes the picture for the global economy less pull back
Right.
from assets that seem riskier.
Yeah.
And that risk-off feeling definitely extends to crypto, which, I mean, despite all the growth it's seen,
Yeah.
it's still, seen as volatile
Yeah.
by a lot of people.
Yeah. And I mean, the timing just seems kind of telling, you know. Bitcoin had a pretty sharp drop
Yeah.
around March 4th,
Mm-hmm.
around 9.5%. And that just happened to be like almost at the same time
Yeah.
as those headlines about tariffs.
Yeah.
Hard to ignore that.
Yeah. Between, the wider world
Right.
and the crypto market, these aren't isolated incidents.
Yeah.
These prolonged trade disputes, they just create a feeling
Yeah.
of, is the economy going to do well? Recovering,
Yeah.
quickly, because investors would rather just kind of sit on the sidelines and wait for things to be clear before jumping back in to higher risk stuff.
So, I mean, as you're watching your crypto portfolio, keep an eye on those global economic trends because they have a real impact.
They do.
Okay, let's shift gears a little bit here.
Sure.
And their stance on crypto.
Yeah.
There was talk of a crypto task force.
Right.
This idea of a generally favorable environment. But the actual progress on the regulatory front has been, well, maybe not as fast as some had hoped.
Yeah, I think that's a really sharp point.
Yeah.
I mean, there was all that early talk.
Yeah.
And it did create a lot of positive sentiment that the U.S. could become like a leading hub for digital assets,
Yeah.
all this innovation. But the reality, for example, the whole idea of a U.S. strategic Bitcoin reserve, which people thought would be huge, like it would really push prices up,
Right.
turned out to be way more limited.
Yeah.
Out
Right. Yeah.
and actively buying Bitcoin.
Yeah, which is a big difference.
Yeah.
Like holding on to Bitcoin that you already have versus like going out and actively buying it in the market.
Totally.
Those send two very different messages.
I do.
About, what you think about Bitcoin.
Yeah.
And then of course we have the SEC and they're continuing to, do enforcement actions related to unregistered securities.
Right.
Now, I mean, that's aimed at protecting investors.
Yeah.
But it also contributes to this feeling like there are no clear rules yet,
Right. Okay.
It's just all kind of piecemeal.
Exactly. The regulatory system creates uncertainty for anyone trying to build something new in
Right.
crypto. It also makes bigger investors, the more traditional ones, hesitant to really jump in with tons of money.
Yeah.
Between, how do we encourage new ideas?
Yeah.
And also make sure investors are safe.
Right. Yeah. Yeah.
It's a delicate balance that's taking time to figure out.
It weighs on market sentiment.
It does.
Okay, so we've got these global economic concerns and a bit of a hazy picture in terms of regulations. Now let's talk about how crypto seems to be increasingly linked to the traditional financial world, that rising correlation between Bitcoin and the NASDAQ 100.
Yeah.
That was something I thought was interesting.
That's a really good point because for so long, part of the whole Bitcoin story, like it was a hedge against inflation.
Yeah.
And when the economy was down.
Right.
But now we're seeing that it's actually increasingly connected, especially with growth stocks, like the ones in the NASDAQ.
Yeah.
So Bitcoin is being seen less as this unique thing that moves on its own and more as just another tech stock, basically, which means it's more vulnerable now to the same things that affect the whole tech sector.
Yeah.
And that's a really important thing to think about when you're managing your own investments.
Yeah, for sure.
So you can be smart about risk.
And a big piece of that puzzle is the whole Reserve is doing of interest rates. It seems like every time they make a decision, it has this ripple effect on everything.
It does. It does.
Yeah.
So when central banks, like the Fed, signal that they might not be interested in risky investments across the board, basically, because higher rates make it more expensive to borrow money.
Yeah.
And they make safer investments, like bonds, more attractive. So people are less willing to take big risks. That everyone expected have been delayed has definitely added to the caution we're seeing now.
And it's not just interest rates, though, right?
Right.
I mean, the strong U.S. dollar and the fact that gold is seen as the safe haven are putting their money.
Yeah, because in times of uncertainty, investors want what feels safe.
Right.
And a strong dollar makes things priced in dollars, like crypto, more expensive for people outside the U.S. And then, gold has always been seen as a safe haven, and it's making a comeback.
Yeah.
Which means some investors are volatility or crypto, and that could lead to money flowing out of the crypto market and into those more established safe havens.
No, Bitcoin's halving last year in 2024, that was these halvings, which basically cut the rate of new Bitcoin in half.
Right.
They've been followed by some pretty huge price increases.
Yeah.
But this time feels different.
Yeah.
It's been more muted,
Right, and that's a really important point about how the market might be changing.
Yeah.
Because before, those halvings did lead to big rallies.
Yeah.
Mainly because there was less new Bitcoin coming in.
Right.
But this time, after the 2024 halving, the price only went up around 30%, which suggests the market less caught up in the hype that used to drive things. This idea that less supply automatically means higher prices might not be as true now that there are more institutions involved in the market.
So active to these events, and then the fact that transaction growth on the blockchain slowed down to 300,000 to 500,000 daily transactions.
Right.
That seems to point to a change in sentiment as well, right?
Yeah, I think so.
Less of that, retail buying frenzy that we saw in the past.
Exactly.
Yeah.
Less excitement from everyday people.
Yeah.
And maybe a more, cautious approach from investors overall. It could mean that speculative frenzy that sometimes drives crypto. Might be cooling off.
Right.
For now, at least. That doesn't mean the end of growth.
Right.
But it could mean a shift to a longer-term view.
Okay, now let's talk about what the bigger players are doing.
Sure.
You highlighted this detail about $1 million premium paid for Bitcoin. That sounds like some serious risk management.
Yeah.
Maybe even a bearish outlook from some of the larger investors.
Yeah.
Could you explain what that means, like in simple terms? Okay.
It gives the buyer the right, but not the obligation to sell something, in this case Bitcoin, at a set price by a certain date.
Okay.
So that set price here is $70,000.
Right.
And someone paying $1 million for those put options means a big investor, probably an institution, is worried Bitcoin could fall below $70,000.
Right.
They're basically paying a ton of money to be sure they can sell their Bitcoin at $70,000,
right?
Even if the market price is lower.
So it's like they're saying, look, we're worried it's going to go below $70,000, and we're willing to pay a lot of money.
Yeah. And the fact that there are more put options than call options,
right?
Which are bets that the price will go up,
right?
Means there's more demand for that kind of downside protection. This bearish feeling seems strong. Announcements.
Yeah.
So it seems like the big players are being pretty careful about what might happen to the price in the short term.
And it's not just Bitcoin that's feeling the pressure here.
Right.
It looks like altcoins in general.
Bitcoin's overall share of the crypto market has actually gone up a bit during this downturn.
Right.
A lot of altcoins have dropped even more in price.
Yeah.
Like Ethereum and Solana, which, I mean, they have good technology.
Right.
And lots of developers working on them. But they're just more volatile than Bitcoin.
But then you have these interesting exceptions, right? Like Cardano, which actually surged quite a bit. It really highlights just how unpredictable altcoins can be.
Right. Absolutely.
Yeah.
To it being included in that U.S. strategic reserve.
Yeah.
Even though, that's mostly seized assets. Yeah. It just shows that specific events, even just good news, or even just rumors of good news, can really move prices.
For certain altcoins.
Yeah.
And it reminds us that the altcoin market is not one big thing. Different projects react differently to the same market conditions.
Now, another interesting thing leading up to this downturn was this whole idea of, supposedly pro-crypto stance will really help the market. But that enthusiasm seems to have faded quite a bit.
It has, hasn't it?
Yeah.
That early excitement was real.
Yeah.
The promises of better regulation. Got people really excited. But then the actual policies and actions turned out to be less impressive than people hoped. And the market's realizing that talk is cheap, Right. You need to actually see things happen.
That was tied to his, pre-inauguration hype.
It almost feels symbolic, doesn't it?
Yeah, it really does.
Yeah.
Of the gap between hype and reality. It's a stark reminder that that coin went up so fast and then crashed so hard.
Yeah.
It just shows how fragile market sentiment can be.
Right.
Especially when there's no real substance behind it.
Yeah.
No technological progress. No clear support from policymakers.
Right.
From actual value.
Okay. So it's been a bit of a roller coaster lately, but
it has.
But your sources also point to some reasons to be, cautiously optimistic.
Important to keep a balanced view.
Right.
Because even though the market's down right now, we've talked about the challenges. there are still fundamental things happening in the crypto space that are moving forward, right? And a big one is that traditional financial institutions, like banks and big funds, are getting more involved.
Right.
And that's a huge sign of the long-term potential.
Yeah.
Like, for example, that investment by Abu Dhabi's Mubadala, which is a sovereign wealth fund.
Yeah.
Players are starting to put money into crypto.
Yeah, I mean, that kind of institutional involvement, that feels like it could be a game changer, right?
It really does.
In terms of legitimacy and long-term stability.
Absolutely.
Yeah.
I mean, that kind of investment can bring more stability.
Beyond just investing directly in cryptocurrency, we're also seeing really cool developments in the tokenization space.
Yeah.
More and more companies are experimenting with blockchain to represent things like real estate,
or bonds, or commodities digitally, and this whole process of tokenization improve liquidity. And even create whole new markets, right? It takes crypto beyond just speculation and into, the real world.
Exactly.
With practical applications.
And then, you've got DeFi, which is still maturing.
Yeah.
But it's offering these new financial services that could really change traditional finance and NFTs, which are moving beyond just digital art into things like loyalty programs, ticketing, even intellectual property. It shows how versatile the world.
So the tech itself, it's still very much alive, evolving, finding new uses, even if the market is a little shaky right now.
We're seeing. It's not because of just one thing. It's a bunch of things happening all at once. Global economic uncertainty, unclear regulations, crypto becoming more connected to traditional finance, and maybe also just a reality check after all the hype.
Exactly. It's a combination of all these things that has created the current situation. Now, the short-term risks are definitely there. And we need to pay attention to them. But the market is also maturing. More institutions are getting involved. Technology is improving. So that suggests some underlying strength in the.
It sounds like we need a few things to happen. We need clearer rules from regulators. We need less tension globally in terms of trade and the economy. And we need investors to, people and the big institutions.
Absolutely. Those are the key things to watch. Clearer rules would make things much more certain for everyone. Less trade tension would calm things down. They'll be more likely to come back to crypto.
Okay, so we've covered a lot.
We have.
It's fascinating stuff.
It is.
Geopolitics, regulations, the market itself changing. Here's a question for you. What one thing do you think will have the biggest impact?
That's a great question.
On the next big shift in crypto. Whether it's up or down. And why do you think that will be the key factor?
If I had to pick just one. I'd say clear and comprehensive. Like the U.S. or the EU. Because I think when the rules are well-defined and everyone agrees on them, it removes a lot of the uncertainty that's holding the market back. This clarity could unlock tons of money from big institutions that are just waiting on the sidelines because they're not sure about the rules yet. And it could lead to a lot more people using crypto in everyday life.
So you think that regulatory clarity
I did.
could really be the tipping point?
I think it could be more important in the long run than even big changes in the economy. As it could be the foundation for the next big wave of growth and stability.
In crypto.
In crypto.
Okay, well, that's all the time we have for today. Thanks for joining us for this deep dive.
It's been great talking.